While we are being told that the economy is red hot and the stock market is doing well, both couldn't be further from the truth. Stock markets around the world are in the red in 2018, and there are just a few weeks remaining. Major US corporations are laying people off at an accelerating pace, some over trade issues, others unable to keep up with the competition. How will Americans be able to cope with the economic downturn when they haven't made any preparations? You came here for the truth, so let me unveil that for you. Today we're going to look at the situation that's going on in the United States. First, I want to give you the technical indicators, and then I want to show you a handful of examples of companies that are laying off a significant percentage of their workforce. Today is going to be one of those episodes you wonder, why did this guy put so much information into one video? But again, that's why you're here. So let's begin with this. S&P 500 and the reversions to the mean. If you're a subscriber here for a little while, I didn't say reversions to the meme, and you'll know exactly what I'm talking about. So we're looking at the reversions to the mean, and this chart out of Real Investment Advice just shows you from the 90s up until today the different prices we've had in the stock market, and of course you can see on the right hand side what they're trying to highlight. If you look at that bottom that appeared in 2016 where we'd have to go 36% down, if you look at the numbers from, let's say, the peak back in 2007, then we'd have to come down almost 50% and so on. So they give you those details. All I wanted to really show you was that if the stock market comes down by 50%, we then enter territory that is probably around fair value. It's hard to judge that exactly, but of course a 50% drop would bring it down to more realistic levels, and hopefully we will see that, because I know a lot of people are going to want to be able to get in to buy into these shares. You're going to have companies that are starting to restructure their businesses to not be so risk-taking and to be more conservative, and that's usually what this does in a time like this. Of course, the sad part about this is that companies tend to lay individuals off, and of course that's not good for the general economy. It starts to spread, it starts to snowball, and so on. Looking at this next chart, CAPE, percentage per level, 1877 to current. It might be difficult to understand this chart, but essentially since then, 1877, the average PE ratio, or the cyclically adjusted PE ratio, has been about 14 to 17. All right, that's the average. But currently, we're more in the range of 29 to 32. And essentially what this chart tells us is that we've basically never been at these levels for an extended period of time. Maybe the dot-com boom and bust, for example. That is a time when the valuations were ridiculous, where people were buying anything and everything, and it was rising and rising and rising. And of course, they were burned because of that. So we're looking at all of this, and we have to understand where the stock prices are today are based on many factors, including where the company is going to be, let's say next year, 5 years, 10 years, and so on. That's priced into the stock. But if we start to see more tensions, if we start to see a little bit of chaos brewing, then we start to wonder, what will the stock look like next year and 5 years and so on? That brings the valuations down to reality. Price to annual sales. Looking at the red line, that's the price, the S&P 500, and then the price to sales. And just looking at the two of these, and there is almost a convergence that is happening once again, which we saw in the year 2000. It's just something interesting to see that when you look at these different statistics, when we mirror up with what we've seen before, we have to realize that these are warning signs, that these are flags that are being waved in front of our faces to wake us up. Household corporate equities to DPI, disposable personal income. This shows us that we are the highest ever. The chart goes back to 1980, but we know that we're beyond 2000, beyond 2007 and 2008. And we know that this can only lead to disaster in the near future. You can't have this level of debt. You can't have people that are completely underwater. You can't have all this without it causing a problem. But we don't know when the problem will arise. But the truth is that people won't be prepared. We know that already. Non-financial corporate liability and assets. When I look at that over the gross value added, it starts to paint an interesting picture. And basically, we have overextended ourselves on so many different levels. This is just one. This is what occurred today on Monday's trading session. Dow erases 500-point drop and closes higher in another wild session on Wall Street. There is no reason for this to occur. Maybe in the long term, you could suggest everything's going to be just fine. But in this one trading session, what we saw today was plunge protection team action. There's no other way to look at it. Now, Verizon says that 10,000 employees have accepted its buyout offer. They basically said, we don't want you around anymore. Here's a paycheck. And a lot of people suggest that that's just fine. I don't think so. I think that there will be some people that will take it. They'll take the money. Maybe they need the money right now. Maybe they think they can get another job, take that money. Maybe they're near retirement. They take the cash. They can settle on that. But I know a lot of people that just want to be working. They want benefits. They want their health care. They want the environment of work. They want to be there. They don't want a paycheck and they don't want to be laid off. I used the term fired in a previous video I did recently, and I triggered somebody, more than one person, because they said, it's not being fired, it's being laid off. Look, if you're walked out of the building, call it what you want. But this is one company, 10,000 employees gone. Ford Motor Company's $11 billion restructuring could cost 25,000 employees their jobs, exceeding the cutbacks that GM announced, according to Morgan Stanley. So this is not official. We don't have that confirmed, but the potential is there. All of these companies seem to be getting rid of a lot of people, and Ford could be the next one in line. Obviously, I'm going to bring you a video if that does happen, but keep your eyes on Ford and the information that they produce over the coming weeks. This is a chart that basically shows us what could be happening here in the near future, giving you the number of employees. Obviously, these companies are huge. They produce a lot of vehicles, they have a lot of employees, and when they get rid of people, it's getting rid of great paying jobs that are really a mainstay in any middle class. And of course, this is not the case for the near future. What happens in the long term, maybe something's going to change, but right now, it doesn't look pretty. Foxconn subsidiaries in Indiana are laying off workers after a report that the company is cutting costs. So in this example here, it's only 155 employees, but that is very significant to those 155 people. It's just one more company in the list. U.S. meal kit firm Blue Apron to lay off 100 workers. All right. Looking at Qualcomm to lay off 269 staff, primarily from its data center business. Yet another company. Looking at GoPro, they want to move their production out of China in order to sidestep any possible issues with the whole trade issue that are going on right now. That shows us that anywhere could be susceptible to losses, so keep your eyes open at all times. And last but not least, Cisco, the nation's largest food distributor, plans to lay off an undisclosed number of finance employees in early 2019. This is just another one. I wanted to give you all kinds of examples because it's so important. It's important to track all of this. I've shown you so many over the years, all these different companies getting rid of people, looking at these big establishments, but I wanted to show you some different ones today that I haven't got into before. Obviously, you can look at the big box stores, you can look at the retail businesses, but I wanted to give you an idea of these other companies that are out there that are kicking people to the curb. That's just the way it is. I'm not here to sugarcoat it. If you're looking for something that looks real pretty, looks real fancy, it's got flashing lights, it's got shiny little things on it, it makes all kinds of little funny sounds, and it has a bell on top or something. That's not what you come here for. You're coming here for the information. You're coming here for the truth. I don't have a very expensive production studio. I do what I can, and I know that you appreciate that, and I just want to thank you for that. Okay, so I don't do enough thank yous, but I should do it more often because I'm really thankful for you. I see all the thank yous every day, but it's me who's thankful for you. So that's all. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. So I do appreciate that very much. I'm trying to get more thumbs up on these videos because it helps to acknowledge to the platform that these are good videos. And that's how you do it. You just click the button and that's it. If you can obviously comment, that helps me out as well. I know that there's a few people who just comment the same thing every day. They're trying to support me by adding more comments in there. If you can interact with other people, every comment helps, every subscription helps, every thumbs up helps, and I want to thank you for that. If you want the financial education you were not taught in school, these 2 books have it all. You can get everything you need from A to Z. These books will truly help you all understand all the details of the most complicated subjects and yet make it very easy to learn. So check that out at the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.